Hello everyone and welcome to this new episode of Business Africa. Coming up, Equatorial Guinea seeks to attract investors to develop oil and gas resources. Zimbabweans react to further increase in fuel prices as food shortages and inflation bites. And in Rwanda, the National Council for the Development of Agriculture Exports calls on the locals to consume more local coffee. It is the third largest oil producer in sub-Saharan Africa after Nigeria and Angola. Equatorial Guinea, also rich in gas, has embarked on a balanced management of its natural resources. The country, whose gross domestic product exceeded 13 billion in 2018, has embarked on a major socio-economic transformation plan that will enable it to improve its many resources, including health and education. More details with Serge Patrick Mankou and Michael Dibier.
Not much is mentioned of Equatorial Guinea, one of the oil and gas wealthiest country in Central Africa. According to International Monetary Fund IMF latest estimate, the Central African nation boasted of a GDP of $13.32 billion in 2018. The figure, which is 4.5 times that of Kenya, ahead of all African countries, excluding richer island nations, Seychelles and Mauritius. The nation of 1.2 million is working to boost the standard of living of its citizens through a socio-economic transformation strategy fueled by its oil wealth. The country's Minister of Mines and Hydrocarbons, Gabriel Mbanga Obianga, the African and international industry stakeholders, called on African national oil companies to engage with one another constantly to exploit joint venture opportunities and projects across the continent. Equatorial Guinea's capital, Malabo, will host the Oil and Gas Meeting Day for services companies on October this year.
Sizamba Ambogo, Minister of Finance and Economic Planning, joins Michael Dibier to discuss this further. They first looked into Equatorial Guinea's development through oil revenues.
For us, oil has been a blessing. Before we started oil production, Equatorial Guinea was one of the most poorest countries in the world. And oil has given us the opportunity to lay out the foundation of development. So the way we have managed the oil resources is through what we call economic conference. Oil was discovered in Equatorial Guinea in the mid-90s. Right after that, in 97, the country organizes the first economic conference, which brought together public sector, private sector, civil society, international partners, development partners to discuss about the way that these oil revenues were supposed to be used. So the first priority at that moment was to repair the basic infrastructures that the country has at that moment, because the country was devastated after all the things the country had been through. It was absolutely devastated. So in 97, the idea was to repair the basic infrastructure that the country had. In this development plan, which was the vision of the president, His Excellency Obianga Mambazogo, together with all the institutions of the Republic and international partners, the idea was, okay, the country will invest. We are going to invest in infrastructures. We are going to invest to enable the development of the private sector. We are going to invest in enhancing the living condition of the people.
They also discussed the various economic diversification projects in Equatorial Guinea.
You know very well that in 2014, the decrease of the oil prices was very bad news for all of us. So in the last 2 years, we've been trying to adjust the economy without impacting a lot on the social aspect, and then controlling a little bit more the capital expenditure. And also working aggressively in changing the business climate of the country. So a couple of months and a half ago, we organized the third National Economic Conference to come up with a new development strategy with two huge ambitions now: how to foster industrialization in Equatorial Guinea and how to consolidate the social gains we have achieved over the last 10, 15 years. So this is our priority now. Now, all these infrastructures, the idea is them to be like the basement, the foundation of development, because we invested in schools, in health, in logistics, in infrastructures, because we believe they are critical components of development.
After the break, we see how Zimbabweans are reacting to the multiple shortages and inflation in the country that is on the verge of hyperinflation.